Hello, and welcome to this chapter over medical plans. The one thing I would like to tell you right up front about this section of the test is you need to remember the test is different than the real world because a lot of us have some familiarity with health insurance. And so we might try and use what we think we know to answer a test question. And so I will definitely point out some things along the way here that are going to be completely different in the test world than they are in the real world. So first, let's talk about some different medical plan concepts down at the bottom of the page. First, fee for service versus prepaid plans. Fee for service is where the doctors will get paid a fee for the service that they provide. For your test, you need to associate that with a PPO, or a preferred provider organization. So they get reimbursed for their services. Then there are prepaid plans where the doctors will get paid on what's called a capitated basis. This you need to associate with an HMO. What that means is the doctors are getting paid a set fee for each member of the HMO, whether that member sees that doctor or not. That doctor is making the same amount of money. So it's very important for your test also that you know that HMOs provide their benefits in the form of services as opposed to reimbursement of the service of the doctor or hospital. Next, we have major medical plans. This is where you would have one policy that covers everything except for those things that are specifically excluded. So remember from an earlier chapter, we talked about comprehensive medical plans, and major medical is definitely one of those. There are some moving pieces to major medical. You adjust any of these pieces and it will affect the premium that you pay to the insurance company. First, there will be a deductible. The deductible is the amount you pay before there's any cost sharing with the insurer. Your deductible could go anywhere from $500 to $1,000 to $2,500, or thank you Affordable Care Act, $6,000. Now, very important that you're able to answer the test questions involving the deductible and the amount of it and what it does to your premium. So just always remember, the higher the deductible, the lower the premium. Now, once the deductible has been met, then there is coinsurance. Coinsurance is a percentage of cost sharing with the insurer. So it kicks in after the deductible has been met. That's where you get your 80-20, 70-30, 90-10, 50-50, for instance. The insurer is going to be the number on the left as the percentage of expenses that they will pay after the deductible. The insured is the number on the right as far as the percentage of their expenses they pay after the deductible. Next, major medical policies have a stop loss limit. The stop loss limit is where you've reached your out-of-pocket max and are no longer billed for your medical expenses. This is where the insurer takes over 100% after the stop loss. As far as maximum benefits go, it used to be that major medical policies had a point where they would quit paying, like $1 million or $2 million. But because of the Affordable Care Act, major medical policies are now unlimited on their coverage. They don't ever quit paying. Also, because of the Affordable Care Act, the dependent child age limit is now 26. So dependent children can stay on their parents' plan up to age 26, or even after 26 if they're still dependent upon somebody for support. Now let's look at some different plans and the words you need to associate with each one for your test. First, there are health maintenance organizations, or HMOs. HMOs are all about preventive care. They encourage you to stay healthy through regular immunizations and checkups. They want to catch stuff early. Now, all of these plans we talk about are called managed care plans. They are helping to manage your care. The whole purpose behind managed care is to control their cost. Next, HMOs have a limited choice of providers. You must pick from doctors and hospitals on their list. If you are a member of an HMO, you are called a subscriber. So subscriber equals member of an HMO. Now, as a subscriber, you get to pick your doctor from their list of providers. Your doctor becomes your primary care physician. Now, anytime the need arises for medical care, you can't just go see any doctor on the list. You have to go through your primary care physician and get a referral. This is called the gatekeeper concept. You need to know the gatekeeper concept. The whole purpose behind the gatekeeper concept is to keep down cost of high-priced specialists. Next, and this is test specific, a co-payment is a specific part of the cost of care in an HMO. That's your $10, $25, $40 co-payment. And once again, that is going to be specific for your test that you associate a co-payment with an HMO. Next, HMOs operate on a capitated basis or a prepaid basis. Remember, the doctors within the HMO get paid a set fee for each member, whether that member sees the doctor or not. That's why HMOs provide their benefits in the form of services as opposed to reimbursement of the service of the doctor or hospital. Next, HMOs are all about specific geographic areas. So in your state, there's pockets of HMOs throughout the state. You must live within their specific geographic area to get service from the HMO. If you move outside of the area, that would be a reason for them to drop you. Even though they are all about specific geographic areas, HMOs must provide both emergency care and inpatient hospital care in or out of the service area. So for instance, if you're traveling across the state, and you get in a car wreck and you're outside of your HMO service area, if you have to go to the emergency room, your HMO has to cover it. Even if you get hospitalized, any inpatient hospital treatment you get, your HMO has to cover it. Next, we have preferred provider organizations, or PPOs. Now, PPOs are called fee-for-service organizations. The doctors within a PPO are getting paid a fee for the service they are providing. So PPOs, you need to associate that it's all about reimbursement of the doctor or hospital. To be a doctor within a PPO, all you need to do is agree to charge the approved fees, follow the standards of the PPO, and doctors can be added at any time during the year. Now, PPOs also differ from HMOs in that PPOs, they have a broader choice of providers than an HMO does. Now, it's still limited in that you have to pick from doctors and hospitals on their list, but it is not as limited as an HMO list of providers. PPOs are also called managed care plans, once again, helping to control their cost, and I go through those characteristics later. PPOs also differ from HMOs in that a PPO, if you're the insured, you can go see any doctor on the list anytime the need arises for medical care. So you don't have a gatekeeper, you don't have a primary care physician, you could choose a different doctor every day of the week. And let me add to this, as far as a PPO, please make a note of it, that deductibles and coinsurance are a specific part of the cost of care in a PPO. Once again, very test specific on that information that you associate deductibles and coinsurance with a PPO, and you associate a co-payment with an HMO. Next, we have point of service plans, or POS plans. Point of service plans are merely a combination of an HMO and a PPO. So let me give you the characteristics for each. First, the HMO part of a point of service plan. First, the doctors are paid on a capitated basis. They get paid a set fee for each member of the POS network. Next, you as a member of a point of service plan, you get to pick your primary care physician from their list of providers. So that's the HMO part. Doctors are paid on a capitated basis, and you pick a primary care physician. But here is the PPO part. Even though you have a primary care physician, you can go see any doctor on the list anytime the need arises for medical care. So your primary care physician is not considered to be a gatekeeper. They are just your primary care physician. Now, on any of these plans, if you do go outside of their network to go see your favorite doctor, you could pay more or your benefits could go down. Now, specific to a POS plan, if you go outside of the network and go see your favorite doctor, well, you are going to pay more, usually through higher co-pays or co-insurance. And then here's the key to answering your test question. The doctor that you go see will get paid a fee for the service they provide. So that's what you need to know for your test. The doctors get paid a fee for the service they are providing outside of a point of service plan. So all three of these plans are called managed care plans. They're hoping to manage your care. The whole purpose behind managed care is to control their cost. Some of the characteristics are, they're all about preventive care, especially in an HMO. Most will provide outpatient hospital benefits as opposed to you being an inpatient hospital. Most require pre-authorization or prior approval requirements, so you have to get second opinions. They offer prospective reviews, so before you have a procedure done, you must check with your insurer, are they going to cover it? And if they are, how much of it are they going to cover? These plans will use what's called concurrent review. This is where they will follow along as you progress through your treatment to make sure you're getting better and, once again, controlling their cost. Some things about the Affordable Care Act you need to know. You need to know that newborns are covered from the moment of birth, and you must notify the insurer within 31 days of a newborn's birth. Next thing about the Affordable Care Act, it allows individuals with pre-existing conditions to obtain coverage. So that's really the main purpose behind the Affordable Care Act, is to do away with pre-existing conditions. To be eligible for coverage on the marketplace, you have to be a U.S. citizen or be lawfully present in the U.S. You must live in the U.S. and you cannot be incarcerated. As far as the premium rates that insurance companies can charge, the factors are geographic rating area, what part of the country you live in, family composition, single or family, your age, and tobacco use. And then as far as essential benefits with the Affordable Care Plan, hospitalization, maternity, emergency, preventive care, wellness, chronic disease management, pregnancy and childbirth must be covered. Policies must be a guaranteed issue. Once again, you cannot be declined because of your health issues. So once again, did away with pre-existing conditions. They must be guaranteed renewable, usually up to a certain age, like 65. You must have a right to appeal. We know the dependent child age limit is 26. We know they have no lifetime or annual benefits anymore. Remember, they're unlimited on their coverage. And then one thing that might be important that you don't know is that diet counseling is a part of the Affordable Care Act. So that's going to do it for this chapter. We'll see you on the next video.